Hello and welcome to our presentation, The Training of Business Money Management Made Easy. We're with the University of Arkansas ASB TDC, and we will look forward to this hour of great information from one of our business consultants, Stephanie Parsons. And if you're not familiar with the Small Business Development Centers, uh, wherever you are in Arkansas, you would have access to a center. We're in the Northwest Arkansas region, and the ASBTDC offers one-on-one confidential counseling for folks who are either aspiring to start a business or already have a small business and need some guidance or direction in um, any uh, any of our areas, finance, uh, marketing. And so I'm going to go ahead and turn this over to Stephanie and we'll get started.
Great, thanks, Julie.
Mhm.
As she said, my name is Stephanie Parsons. I am the finance and kind of business consultant for Fayetteville's ASB TDC. Been doing this for about 5 years now. Prior to this, I was a commercial loan officer at local banks for about 14 years. And then I worked for Walmart home office in the Treasury Department for another 10 years. So I decided I needed to put my skills to some good work and come help the local community get their small businesses up and running in any way I can possibly help them. So that's kind of where I hail from. I've been around Fayetteville for about 30 years, so I kind of know this area and know finances pretty well. But Julie, like she already said, that we have offices all over all over the state, but every state has some sort of small business development center, but Arkansas has quite a few. Arkansas, the Little Rock is our lead center, but all the other university campuses also have some offices that you can visit or Zoom with and get some consulting services. It is free. All of our services are totally free to you guys. It's We're part of the SBA, the university. We get funding from both of them in partnership with the Small Business Development Center. So a lot of our consultants are previous professionals, either working at Sam's Club. We've got some marketing specialists. We've got business plan specialists. We've got branding specialists. We've got a little bit of everything that we can help you with in any type of business that you're going for. We can help anything from a very, very small business that's just operating out of your home and you're just selling some widgets, all the way up to a big business that might need some help with understanding their cash flow or some management skills. And just, if anything, just bounce off some ideas from somebody else, kind of like a working group, if you will. So no business is too small, no business is too big for us to help you guys out. Um, as I go through this, if you guys don't mind, just kind of keep your questions till kind of towards the end. I'll kind of pause halfway through this and see if there's any questions that anybody might have, because I know finance is not everybody's cup of tea. And I will say that's definitely one of the biggest hindrances to small businesses when they get started is the bookkeeping. It causes the most angst and pressure, and a lot of people will lose their passion for their business because they're spending so much time on bookkeeping and they don't understand accounting or whatever, and it just frustrates them. So they're spending hours on end just to try to do that. So my recommendation, so you don't lose your passion, is to hire a bookkeeper. And I know as a small business, sometimes that's not feasible due to income. So think outside the box on things like that. Maybe you can barter your services or your product to somebody that can help you with bookkeeping. I mean, you don't need a CPA. You just kind of need somebody who can keep the books organized for you till the end of the year, and then the tax accountant can come in and kind of, clean them all up at that point. But bartering now, there's lots of people, maybe at your church or whatever, that are retired and they're bored. They just want something to do. So just think outside the box and don't stress over the bookkeeping. Definitely get somebody to handle it for you, because otherwise you're going to burn yourself out and pull your hair out on top of that. So, but today we're going to kind of go over some record keeping rules, bookkeeping basics, bookkeeping software, and then the three key reports that you guys definitely need to pay attention to. So let's jump into this. Rule number one is keep all business and personal finances separate. So in this aspect, a lot of people, when they do start their small businesses, they're going to run a lot of their expenses, especially office supplies and stuff, through their personal accounts. I don't recommend doing that at all. Definitely try to keep up separate in some form or fashion. Now, if you don't want to set up a whole nother checking account or whatever, at least designate a credit card that is for business purposes only. You can apply for a new one or use one of your personal ones, but that's the only thing you use that card for. So every transaction that's on that credit card is tied to the business, and it'll be a lot easier for you to do your bookkeeping that way, whether you're going to import the data or if you're going to hand type it in manually yourself. But keeping those two separate will make your life so much easier down the line. And especially if you were to get audited or whatever, it causes a nightmare if you're trying to separate your personal and your business finances. Rule number two, stay organized and secure documents securely, store secure documents. Or I can't even talk. Or the big thing on this is you don't want anybody's personal information to be able to be distributed to either employees or to other customers. So you definitely want to keep it under lock and key, especially if you have social security numbers for any reason or credit card information, as well as your own, like your checkbook, everything else. Just make sure you kind of keep all of your LLC documents, just keep everything secure so that one, you know where they are, and two, nobody can get in there, and fraud is rampant these days. So you don't want anybody to have any kind of information about your business. Uh, Rule number three, this is kind of ties into what we were talking about earlier, consistently recording all your transactions. If you're like a lot of people, it's like, again, you don't want to really do bookkeeping. So you kind of keep pushing it off to the end. And then the end of year comes, you're like, oh crap, I've got to do my taxes. So then you're going to start trying to record all your transactions, and it's going to be, a nightmare to try to go back and remember. So even if you just scribble them down on a notepad, at least record them so you know what that particular expense was for and where that receipt is for that. Again, just for the end of the year, it's going to make your life so much easier. That kind of rolls into the preparing for taxes and financial reporting. If once you kind of consolidate all this information, you're going to want to this is something we can also help you with. Any of these things, if you guys get, stumped or whatever, you feel free to call us and we can help you walk through it. But, just making sure you have all your receipts and your financial reports ready to go, where all your income has come in, what you've spent for your CPA or whoever's going to be doing your taxes for you. But just make sure you have all that put together in a timely manner, because taxes for businesses do have to be filed before personal taxes. So they are due the middle of March versus personal taxes are in the middle of April. So you definitely want to stay on top of that. Technology, AI is your friend and software is your friend. There's several different ways we can keep up with making your record keeping easier. There's several different software packages with the use of AI now. It pretty much will roll it out for you as well, even if it's just a spreadsheet. The key on AI is to make sure that you look at the figures, because AI is famous for not pulling in the right numbers. So you'll definitely want to make sure that it's right if you're going to use the AI. Okay, bookkeeping basics. Yeah, so we're just going to kind of go through this, and then at the end here, like again, I'll ask for some questions, and that's when I know you guys probably have a lot, and this is all probably just like too much for you to absorb all at one time anyway. So we'll definitely break this all down after I kind of go through this presentation. Chart of accounts. This is what's used to label your assets, your liabilities, your equity, income, and expenses. Now, the general accounting practices, they recommend particular numbers be assigned to different categories, like all assets are in the 1000s, all liabilities are 2000s. And the main reason for that is to just keep your chart of accounts together, because if you just sort it by name, then it's going to have an asset and expense and equity. And so it's just going to be out of order. But if you give it a number, then it's sorted by that number, and it'll keep all of your assets together, your liabilities together. And it kind of goes in line with what a typical bank and or investor would want to see on your chart of accounts. Now, do you have to have the numbers? No, you do not. If you're small enough and you just don't want to mess with it and you just don't like to have the numbers on your reports, you can definitely just name it whatever you want to name it, but just know that when you look at your chart of accounts, it might be a little out of order in your software package, but it's not a big deal to use the numbers or not use the numbers. It's strictly an organizational thing for you guys. Okay, cash versus accrual accounting. This kind of confuses people every once in a while. Cash basis is basically when you receive money, like your sales, you bring it in, and that's when you claim it as income. On an accrual basis, it can be like accounts receivable, like they haven't paid you yet, but you've invoiced them. You've sent them an invoice for $10,000 and they haven't paid it yet, but you're going to go ahead and log it in your books as a sale. And then you're also going to pay sales tax on that amount if you're selling something that is applicable to sales tax. So a lot of people always choose to go cash basis if they can, because why do you want to pay sales tax on something or income tax even on something that you haven't collected yet? So, and you can stay on a cash basis accounting until you're about 25 million. And then at that point, the IRS does require that you switch over to an accrual basis because, they're going to want their tax money, right? So that's kind of the biggest difference between them. Cash basis is definitely less complicated. Again, it's when you get paid and when you spend the money, it's all right then and recorded right then. You don't have to think about your accounts payable or your accounts receivable because it's literally cash in, cash out. So it's your cash flow is a little more visible than doing it on an accrual basis where you're looking at accounts receivable, accounts payable, and things like that. So always try to go cash basis if you can. Software. All right, this is everybody's big question too. Which software should I use? Everybody knows QuickBooks. It's one of the top performers out there. Do not feel like you have to use QuickBooks because it's not the only game in town. QuickBooks has started to get a little more pricey for people. Um, it does do everything you want it to do, but for a fee. So if you're big enough and you really kind of need that robust accounting software, QuickBooks is definitely a good way to go. There's other programs that like Wave is another really good one. It can do invoices and sales and pay through your website and all this. It'll total up all your checks and sales, and it's a really good one for retail, especially. Some of the others that we recommend, I really like Zero. It's one of the newer ones that have really kind of pushed their way to the top of the list. And FreshBooks. Those two are my favorite ones outside of QuickBooks. They're a little less pricey. They're more geared towards the small business guy, girl. And it depends on how your brain works. Some of the biggest difference in a lot of these programs is just their interface. So some people like to read things left to right. Some people like to read things up and down. And the interface, if it makes sense to you, is why you would want to use that program. If you pull up one of the other ones and you're like, too many moving parts, I can't follow it, then try one of these other ones because all of the other ones outside of QuickBooks are pretty cheap, definitely cheaper than QuickBooks. So you can try either one of those. We do offer, and Julie, correct me and make sure this is still accurate, that we offer a discount on QuickBooks if they've signed up with us. Is this how this works?
I'm unsure about that, Stephanie.
Okay, I think you do. If you just scan this QR code, you'd get 30% off for your first 12 months. And same thing for payroll. Payroll through QuickBooks is pretty handy to have everything in one place, but there are other payroll services out there that are just as good, like Gusto and Paychecks, and some of those other ones are just as good as QuickBooks. But if you're one of those people that like to have everything in one spot, most of these accounting packages will have your payroll abilities in there. And using them, make sure you don't mess up your payroll taxes, unemployment taxes, and all that other fun stuff. Because if you get upside down on that stuff, you're going to be in a world of hurt. And that's when Uncle Sam's going to come after you. So any of these programs, like say FreshBooks, Soho's good, like say just pull each of them up and see which one makes you feel the most comfortable in understanding, and so you can log your own books. The biggest thing is get the numbers into QuickBooks or some sort of program. Even Google Sheets, Google Business has a free profit and loss statement and a free balance sheet, all sorts of income, expense items, invoices. So they've got a lot of free capabilities, and so does Excel. So don't feel like you have to use an accounting software. You can, if you're small enough, you can just use an Excel spreadsheet. to log your expenses, and it'll spit out a profit and loss for you as well. We've got those templates that we can email out. But there's so many tools to your advantage these days that please don't feel like you have to buy an accounting package, because maybe you don't. It just depends on what your business is. All right. So I know that was a lot in a real quick time. So before we jump into reports and everybody's eyes kind of glaze over and become a deer in headlights, I want to see if anybody has any questions real quick.
If you have questions, just post them in the chat and then we will get to them as we go along.
Beautiful.
One good question that Gabriel asked through the chat, he was asking about the live stream, if there was going to be a recording. And yes, there will be a recording of this entire presentation. We will post it on our website, and I will include that link in the follow-up email that I'll send to you, along with a couple of sample reports.
Yeah, once you start going digging through this, because I know it is a lot to digest, we'll have contact information that we'll give out at the end. That is, feel free to reach out with us with any questions you might have on it. But if there's no other quick questions, let's dive into these financial reports. Say the biggest issue that most small businesses have is understanding the difference between an income statement, aka a profit and loss, and the statement of cash flows. Your profit and loss does not necessarily mean you are making money just because it shows you made money. Your statement of cash flows is actually going to be more relevant as far as seeing if you really made money. The income statement and profit and loss are more for tax purposes and what the business actually made. Your cash flow is going to be all those items that you spent, aka like on loan payments, or you bought a bunch of inventory and things like that. So stuff that you paid cash for that wasn't, while it's part of the business, it doesn't get expensed the same way as it does on the cash flow statement. So we'll kind of walk through that a little bit more as we go through this. But you'll have your income statement, which is also referred to as a profit and loss. Then you've got your balance sheet, which this is just a report that shows all your assets, which will be your cash in the banks, your receivables, inventory, any machinery and equipment, anything that you own that's a tangible asset. Liabilities are going to include your accounts payable, any long-term debt, any loans, credit cards, if you're doing payroll, your payroll liabilities will show up here as well. And again, any bank loans and loans from shareholders will also show up on the balance sheet. And at the end of that, it comes up with your owner's equity, which is basically what your business is quasi worth, for lack of a better word. There's several ways to value businesses, but one quick down and dirty for yourself is to say, okay, I have assets of X, I have liabilities of this, I have a net equity of $140,000 right now. That's what my business is worth, because it's taken in consideration all of your assets and cash and so forth. So that's just a quick down and dirty, but that doesn't necessarily mean that's what your business could be sold for. Usually people will take that figure and maybe take it times 5, and that's really what that business is worth. It just depends on that particular type of business. But again, the balance sheet is pretty straightforward, down and dirty. Assets, fixed assets, and your liabilities is going to equal your equity in your business. A lot of people don't keep up with this because they're really not sure what's considered a current asset versus a fixed asset. And really, a fixed asset is something that's going to be depreciated over time. So it's a longer, drawn out depreciation schedule. A current asset is going to be something like, accounts receivable and cash, something that can be depleted within a 1 year's time. So inventory, it's not going to technically stay there. But if you bought a big piece of equipment, that's going to be a long-term asset, and it's going to be depreciated out over time and not taken as an expense on your profit and loss. That's one of the biggest differences between the income statements and the balance sheet. Same thing with liabilities. Current liabilities are going to be your credit cards, any loans that renew or become due less than a year is a current liability. Anything over a year that you have to pay back, a car loan that's five years, that's going to be a long-term liability. Or some software packages call it a non-current liability. But those are those fixed assets or fixed liabilities, usually tied to the fixed assets above. The difference between those two categories equals your equity of your business again. Pretty straightforward on that stuff. Okay, income statement. Again, most of you guys are probably pretty familiar with this, but you're going to take your revenue, your cost of goods sold, which that could be, just the materials to produce your widget, whatever you're choosing to sell, depending on if you got a service business, and let's say your service business can't run without having a certain laborer. Well, maybe that's one of your cost of goods sold. So it's whatever it takes to get that product out the door or that service out the door. Now, not necessarily like administrative payroll and things like that. That's going to be just an operating expense. But anything tied to the reasoning of selling that product is going to be your cost of goods. That leads you to just your gross profit. That's prior to any operating expenses and any other income and expenses that might come down through operating of the business. It's going to be like your rent, your depreciation, insurance, repairs and maintenance, utilities, marketing, all that fun stuff. Payroll is going to come underneath your operating expenses. Other income and expenses, sometimes these categories are used for like interest income. Let's say you happen to have a savings account and you're earning 6% interest on your money. That's going to be other income. It's not tied to a sale of your products or your business. It's just extra income that's not necessarily tied to the business. Same thing with expenses. It's just something that's rolled out there that's not tied to this, but you have to log it. It's like a one-time expense or something. You might want to throw it under other expenses. A lot of times people will use these two categories for like Amazon has your points and you can buy products with points. A lot of people will put that under other income, or credit card cash back will go under other income, things like that. You don't want to put it up there as part of sales because that's going to skew your actual sales of your product. After all that's said and done, you're going to end up with your net income. And this is what the business made. Now, the biggest difference right here, I don't know if you guys can see very well on this slide, but it says depreciation of $80,000. Well, depreciation is not a real expense. It's not tangible, but it is an expense that you can take on your taxes, so you don't have to pay as much income tax on your business. Same thing with amortization. The one thing that confuses a lot of people during this section too is loan payments. You need to make a loan payment. It's a $600 payment, 500 of that's principal, and $100 of it goes to interest. Well, you can deduct the interest expense on your income statement, but you cannot deduct the principal amount. So that $500 isn't actually a balance sheet item. And that's probably one of the biggest mistakes small businesses make, is understanding that your loan payments cannot be taken, they're not an expense all the way. The interest expense is, but the principal amount is not. So that's another kind of little quirk to the income statement that a lot of people miss. That flows into the actual cash flow statement. And that's where you'll record those kind of loan payments and fun stuff like that. Yeah, cash flow statement starts out with what you have in the bank already. It takes into consideration all the cash that came in and then all your cash that came out, and that leaves you with your ending cash. Pretty simplistic, but it's a little more kind of detailed than that. You're going to want to get like a down and dirty is like, okay, you've got beginning cash of $10,000, you have net income of another $10,000 of your cash. So you're sitting with $20,000, and then you turned around and purchased a piece of equipment for cash for $5,000. Well, that $5,000 doesn't come out of the income statement. It does come out of your cash flow statement. So even though your business made $20,000 according to the income statement, you really only made 15 because you spent 5 of your cash to go buy that piece of equipment. So that's the biggest deals in a cash flow expense, like for a big piece of equipment or whatever. The IRS states anything over $2,500 has to be claimed as an asset and a liability if there's a liability tied to it. But it is definitely tied to your cash flow. Whether you financed that particular piece of equipment or you paid cash for it, it's going to end up on the cash flow statement as a use of cash, not in your profit and loss, as you guys kind of see on this example. And that comes up with your net ending cash that will carry over to the next month. So if you're carrying over $10,000, then the cash flow statement for the next month starts with 10,000, and we go through the same process over again until we kind of see what your cash flow is. So do not confuse that your business made $20,000 and you think that's how much money you should have, because that's not necessarily true. It depends on what you spent your cash flow on. And so your true cash statement might only be 10 or 15,000. So just try to bear those in mind. And that's probably the biggest and hardest thing for people to wrap their head around. Just important numbers to kind of think about on your income statement. It is payroll cost versus revenue and cost of goods sold, operating expenses, fun stuff like that. Balance sheets is your inventory, equity, and your liabilities. Cash flow is the change in those two items, for lack of a better word. Again, this is probably the hardest thing for most people to kind of wrap their head around. Just some good habits for everybody to get in. Just again, record all your transactions. And it doesn't matter if you do it in a spiral notebook or you type it up in Excel or you have software. Just keep up with it. So at the end of the year, you're not struggling to come up with some numbers. And plus, in order to run your business, you need to know on a daily and if not monthly basis as to how your business is doing. So you know, can you afford to go out and buy more cost of goods? Can you do this? Can you do that? So if you don't know all that, you can't really efficiently run your business. You really need to know where you're making your money, where you're making the most money, and then where you're spending your money. And then pay attention to those, because some of them, if they're out of whack, that's when you know, oops, I'm paying way too much for rent based on my industry. I should only be paying 7% rent, but I'm paying 12. So having those comparisons so you can see where your business may fall short or is better than some of the industry standards is a good thing to kind of pay attention to. And also just, tracking your mileage, your receipts, keep all of those. Tracking your mileage is a good trick to be able to pay yourself as an owner and not have to claim it as income. Because if you can turn in that you drove 50 miles a day, then the business can pay you the 56 cents, I believe it is at the IRS right now, reimburse you for mileage. Well, that's one way you can get paid back. Yes, you're paying your own gas, but you'd be paying your own gas anyway, right? So remember the little mileage trick so you can pay yourself without having to create a taxable amount that goes to your bottom line. That's just one little trick. Then, and of course, we've got lots of resources for you guys and other training. You can log into our ASPDDC website, follow us on LinkedIn, Twitter, Instagram, all that fun stuff. But there's several courses out there that you guys can read. This will probably be out there eventually after we finish up the recording, I'm sure. But there is a lot of wealth of knowledge for everybody on our website if you just want to go out and look at that. And then if you need anything, as I said before, here's my contact information. Again, I am in Fayetteville. It's my phone number that does go to the main office. It's easier though if you email me, which is the sp111@uark.edu. That's probably the quickest way to get in touch with me. Phone calls sometimes get missed. We all don't have phones on our desks anymore, so it's probably easier to definitely email me and I can call you right back from my cell phone or something. So definitely jot this phone number down, but definitely the email, and let me know if you have any questions on anything we've kind of gone over today, because I know we've gone pretty quick. And my light just went out. There we go. All right, again, just some more resources and training emails and Instagrams and Facebook that you can watch. And that's it in a nutshell. I know we covered that pretty quick, but please just let me know if you have any questions and we'll try to answer them for you real quick here. We've got plenty of time. We got like 30 minutes left.
Stephanie had also mentioned that if you're in Northwest Arkansas and we are your appropriate center, you can check out our website at sbtdc.uark.edu. And in the upper right-hand corner is a get a consultation button. That's another way that you can get scheduled for an appointment if you're not already a client of the center. And if you are in other areas of Arkansas, then contact asbtdc.org and they can direct you to the appropriate center. And I mentioned in the chat couple of things. We'll be posting this recording to our website, and in a follow-up email, I will send you that link as well as a copy of the PowerPoint deck that Stephanie has used today, and then a couple of those sample documents that I mentioned earlier. So if you have a question, go ahead and put it in the chat, and Stephanie will answer that for you.
Yeah, I say again, just if you take anything away from this presentation is there is a difference between profit and loss and your cash flow. Don't let that trip you up. Everything else can be worked out, but you've got to know those figures in order to be able to run your business effectively. I know we threw a lot at you, so you're probably just head spinning. It's like, I know I'm going to have questions later. So, and if you do, please just email them to me. I'll be happy to send them out. And if somebody asks a question, I feel like I should be able to email all of you back and ask them and reply. So that way everybody gets the benefit of that question.
Okay, I don't see any questions in the chat, so I'll give it another few seconds to see if anyone um, needs some advice on anything.
Yeah.
Otherwise, we will go ahead and wrap this up.
Yeah, some other quick points, just as my head's spinning around thinking about how to help you guys. Funding your businesses also is a big item. So don't forget there's those 0% credit cards out there if you just need a small amount. There's some local organizations that you can potentially get to get a little bit of money. Grants are hard to come by, even if you're female owned or veteran owned. They're few and far between, but there are some other resources out there, and we can maybe help connect you with some of those outlets for funding your business. But don't forget those 0% credit cards. I mean, they can be very useful. And again, try to keep everything separate from your personal stuff.
Okay, one question. What if your credit is average?
Anymore, if your credit is above 620, then you're still considered a good credit person, and viable to borrow money. If it falls below 620, then it's really pretty easy to get your scores back up. And there are some like high interest credit cards out there that you can apply and get if your credit score is below 620. You just get those, buy a tank of gas on it, pay it off every month. And that's going to start building your credit. They've got secured credit cards that you can put up like cash for a credit card, and that's going to start building up your credit. Sometimes if you your rent on your landlord, if you ask them to, they'll report that you pay on time as well. But those quick to like restore your credit to above 620 is just, get a credit card, pay it off, charge it up again, pay it down. Do not cancel any of your credit cards that you've had for a long time or furniture outlets that you've had loans with, because the longer you've held your credit and not used it, the better that looks on you. So you can cancel the ones that you recently opened. That's not going to affect your credit. But if you get in trouble or cancel one of your older credit cards, then your credit's going to start taking some dings. And you don't want that because the credit bureau, the score is based off of basically how well can you manage your credit? If you got access to $100,000 in credit cards, but you pay it off every month, that looks fantastic on you and your score is going to shoot right up. And if you have every single card maxed out and you've got some late payments and things like that, it's going to take some hits. But even if you have to file bankruptcy at some point due to medical bills or whatever happened in your life, because unfortunately bad things do happen to good people, you can still rebuild yourself. And they say 7 years to start getting your credit back, but usually within 3 to 5, you can start getting, those little credit cards again and start building your credit back up. But average credit is okay. Just make sure it stays above 620. And credit scores are tied to how much your interest rate is going to be if you get a loan. If the lower the score, the riskier the loan is. So they're going to charge up and charge more interest to somebody that's got a 620 credit score versus somebody who has an 820. So kind of keep that in mind too. Hopefully that answered your question.
Okay, we have another. For something like construction where I'm working different jobs, do I need to keep my expenses for each job separate for tax purposes?
For tax purposes, no. For your purpose, yes. If you want to know if you made money on jobs and how much you made off each job, you'll definitely want to keep them separated. But as far as the IRS is concerned and paying taxes, at the end of the day, they're just going to tag you for whatever you say your net income is. They really don't care if it's a cost of good or if it's an operating expense. At the end of the day, in your taxes, you say you made $10,000 and they're going to make you pay income tax on $10,000. But the categories themselves, the IRS doesn't care. They don't care by customer, how much you made off each one. That is all internal for you and for you to help you run your business.
Okay, another one. Do I create these income statements? Hang on just a minute. Balance sheets, statement of cash flow in a general spreadsheet or through a software like QuickBooks. I assume these software generate these sheets for me automatically once I input the data. Is this true?
Yeah, all the software that we went over today, almost any accounting software will produce those reports for you. Some of them even have financial planning reports and management reports that you can just click on and it'll spit that out for you if you need to present to investors. But also Excel and Google Sheets, they have the templates that will do profit and loss and balance sheets for you, and those are free. So if you're not like a huge business or been running payroll or anything like that, you might consider just using Excel or Google Sheets, whichever one you're more comfortable with, and use their templates, their business templates, and just get going that direction. And we can help you set that up too if you decide to go that route. It's not real difficult. But yeah, you do not have to use accounting software if you don't want to. You can scratch it on a piece of paper if that's the easiest thing for you, and give that to your accountant, and then she'll fill in the sheet and or he and then send in your taxes. So again, most of these reports are really for you to stay organized and know what's going on with your business. And if you were to ever get audited, you're going to want to have access to all those receipts and those reports if the IRS just comes knocking on your door.
Okay. This question, would I still need to do payroll if I will be working by myself? He's a mobile detailer.
That's a really good question. We get that a lot. You'll need to make sure if you don't give yourself a payroll, then make sure you pay into your unemployment because a lot of people, have owned their own business. We ran across this one guy. He was 65 years old, had owned his own business his entire life, never paid into Social Security, Medicare, any of that stuff. And so when he thought he was retired at 65, he goes to try to collect Social Security, and they go, "You don't have any. You never paid in." And he's like, "I've been working for 50 years. What do you tell me I didn't pay in?" And they're like, "You never paid in." So he was 65 years old with nothing to retire on. But if you don't want to do a payroll for yourself, which is probably the easiest way to keep up with all those taxes and stuff, you can still go ahead and pay into all of those categories. You can do it once a year or whatever. Just get with your accountant, but just make sure you pay in because otherwise you're going to get stuck at the end and not have any retirement to fall back on. And that's the biggest thing. And if you are going to run payroll, doing your business as a sub S, as an owner, is easier for you to pay yourself than an LLC. That's about the only difference between an LLC and an S corp.
Stephanie, could you be specific about what paying in means?
Yeah, so as you get your paycheck, you look at it and it's like it says FICA, FUTA. It's got all these little acronyms, and there's all this money taken out of your check. So that's your employer taking out your Social Security, your unemployment, state unemployment, any withholding of your taxes. It's funny when they first get your check and go, "Who the heck is FICA, and why are they taking all my money?" Well, it's the federal government taking their taxes. So, but yeah, you want to pay into your taxes, your income taxes, if you think you're going to make a lot, because otherwise you'll get stuck at the end of the year paying a big tax bill. So you can do estimated tax payments for yourself throughout the year. But if you don't run yourself as payroll, yeah, you'll want to pay into the self-employment tax and go ahead and get all those caught up so you're not stuck at the end of the year paying in. But it's all that stuff, all that fun retirement stuff we all hope that
Mhm.
we're going to have at the when we retire.
And an accountant can help an
Yes,
individual with that, correct?
yes, absolutely. Yeah, full disclosure, I'm not an accountant. I'm not a CPA. I've just been in finance for a really long time and I know enough to be dangerous. So definitely run anything past your CPA before you decide to do it.
Okay, any other questions? Those are just some good questions.
Those were good questions.
Hmm.
I told you they had to let it sink in for a minute. It's a lot to absorb, but like I say, if you took anything away, the difference between a profit and loss and a cash flow is critical. And that's what trips up most everybody. And then people get caught up thinking they can afford to pay somebody to do bookkeeping or marketing or whatever. Again, think outside the box. Maybe somebody can do it and they got small kids and they just need somebody to babysit. Well, great, babysit their kids for them, and that'll do your books. Just there's always that barter system. And so find somebody that maybe complements your business and you help them and they help you. So don't just get stuck that you have to pay somebody to do some of these services because there are opportunities out there that you can maybe team up with another business and or a individual that might just need some other help.
Um, Quick question. What is the deal about being a sole proprietor?
Sole proprietor means that you didn't set up a business name within the state, like an LLC or a sub S or a C Corp. Sole proprietor is everything's going to be reported through your social security number. You're not going to have a separate tax ID number like LLCs will have and sub S's. They all have a business tax ID number. Sole proprietors, they will only have their social security and everything gets reported underneath that for your tax purposes. Where you'll want to consider doing the LLC versus the sole proprietorship is if you have a business that somebody could sue you over, like if you're selling coffee, you're going to want to do a LLC because somebody gets burned and they scald themselves and they're going to come sue you. You want them to be able to sue only the business, not you as an individual. So if you are just a sole proprietorship selling that coffee, then they're going to be able to come and take all of your personal assets. You want that LLC buffer so they have to come after the business first and then they can civilly come after you. But as far as the liability of that LLC of that complaint, the LLC is their first line of defense. So definitely think about that. But if you're doing something that there's no reason anybody would ever sue you, of course, everybody's sue happy these days, so you never know. Just really think through that and see if you need the LLC. You can do it online yourself for like $150. Just make sure you pay that franchise fee every year. Otherwise, you'll get in arrears and they'll start charging you penalties. I think it's like $150 every year. You don't need necessarily a lawyer to do it. It's pretty simple to do it, especially if you've only got like a one member LLC or two people involved in the business. If you're going to get into a much bigger business, you might need to have an attorney look at it. But for most small businesses, you can just do it yourself. Same with the sales tax ID numbers. Once you get those, you have to report every month your sales from the previous month, even if those sales are zero. They don't care. If you don't report the zero, they're going to charge you like a $250 penalty for not reporting. So always report your sales if whatever your business is a taxable event.
What is the main difference between an LLC and an S corp?
The biggest difference is LLCs have members and manager members. S corps have officers like a president, vice president, secretary, all that other fun stuff. But as far as how you're taxed, they're identical. All of the profits that come out of an LLC or a sub S flow through to your personal tax return and gets taxed based on your personal tax rate. So, and again, the only real big difference is an S corp allows you to run payroll as an owner and pay yourself a payroll. LLC supposedly, and I've got to look this up, they say that you can't pay yourself on payroll as an owner, but I'm not too sure about that. But the S corp and the LLC, that's the biggest difference on those two. And C corp is for when you have like more than, I believe it's more than 250 employees, you have to bump up to a C Corp, and that causes double taxation. You're going to get taxed at the corporate level, and then you're going to get taxed again on your personal level. So stay away from a C Corp if at all possible. Always go with either an LLC or a sub S. And they cost, I think, about the same to set up either one.
Okay, what if my business hasn't been active? Will I still need to report sales report every year?
Yes, you'll need to report not only for your sales tax, but for your business and franchise tax. And if you haven't, it's easy to do and get it caught up, but they will probably charge you a penalty for paying your franchise tax and not reporting your sales. But yes, you need to report those every month. Otherwise, they will penalize you. But if you get a nice person and kind of play dumb, maybe this first time they would waive those fees for you. I've seen them do it a couple times, but they do have the right to penalize you, and it gets pretty steep. And then you can't open up another business or create another LLC until you pay that. Excellent. Anything else?
Just here are, let's see, are there benefits to filing taxes quarterly? And how would I go about doing that?
You can pay an estimated income tax quarterly. You can do it monthly, but usually people do that when they're afraid at the end of the year they're not going to have the money to pay their income tax bill. So they'll go ahead and just pay in some estimated amounts. It's not hard. There's a form that you fill out and you just submit it and take it to the bank and deposit it, and it gets submitted for you on your behalf. I would only do that if you really, really thought you were going to have such big sales by the end of the year and you were going to get stuck with a huge tax bill that you couldn't afford. And the main reason I say that is because that's money you could be using during the year that you've just given to Uncle Sam to let him hang on to it and use to his benefit and not yours. So you don't necessarily have to. As a small business, I probably wouldn't, but just be disciplined enough to set aside into another account like a tax account and hold back like 30% of your profits, put those into a separate account to be ready for that tax bill and let it earn money for you. Put it in a savings account or a money market, a CD, something. Let it work for you instead of letting it work for Uncle Sam. And if
Okay.
Uncle Sam asked you, I didn't say that.
Well, I need to upgrade my LLC to an S corp in order to do my payroll as a business owner.
Only if you're going to pay yourself. Um, and that's again something I would talk to your CPA about because I've been told both ways that LLC or sub S you can pay yourself as an owner. But then just to be on the safe side, I would contact a local CPA and ask them what really, if you need to be an S corp or if you can do payroll to yourself as an LLC. But you can do payroll to your employees as an LLC. It all hinges on you being the owner of that company is the only caveat to the sub S and the LLC.
Okay, and where do where do you report these sales every month?
There's sales tax. It's called ATAP, and it's a website that you register for when you get your number. And you go in every month and you just sign in and you put in what your sales were, and it automatically calculates how much you're supposed to be charging and tells you how much you owe. And if you've been paying in like early or something, you need to deduct that. But usually you have to pay your sales tax by the 20th of the following month. So for April, by the 20th of April, you need to pay your March sales tax. And now you just put in your March sales, and it'll walk you through it. It takes you all of 5 minutes to do. It's simple, simple. Just go to that ATAP or just go to the Department of Finance and Administration, the DFA.gov, and that'll also do it for you. And then sometimes it depends, like if you sell through Shopify or some of these other POS systems, they may pay the sales tax for you. And that would be fantastic. So always be careful and make sure whatever you're signing up for, that if you're paying sales tax or if they're going to pay it for you. But yes, you have to pay it every month by the 20th or you will be penalized.
Okay,
And
and
again, if it's zero, even report zero.
can I do sales report through TurboTax?
Yeah. A lot of them will actually calculate it and actually print a sales tax report for you that you can use to fill in ATAP. Sometimes they'll even talk to each other and do it, electronically, and you don't even have to go to the separate website. It just depends on your particular type of POS system and what system you're using to run sales.
Okay, anything else before we
Those
wrap
are
up?
some great questions.
Really good questions.
But
Okay,
again, check with your CPA and
yeah,
your attorney if you have
absolutely.
one.
Absolutely. Well, thanks everyone for joining us. And again, you'll get a follow-up email with the different things that I noted, the PowerPoint deck, a couple of the samples, and then also a link to this recording. So that way you can watch it over and over again, review, also have the answers to all these questions. So thanks
Absolutely.
again, and we will hopefully see you next time.
Email me if you have any questions. Thanks for your time.
Thanks, Stephanie.
All right. Bye.